Welcome to Crux Investor. Today we're going to be joined by Bruce McLeod, the CEO of Sabina Gold and Silver. He's going to talk us through their activities of 2018 and also their plans for this year. Good morning, Bruce. How are you?
I'm very well, thank you.
Fantastic. Thanks for joining us. I know it's early there. So Bruce, we've heard your story before, but we wanted to kind of get into a little bit of detail about some of the players on your team, maybe understand a little bit more about you. So can you tell us about yourself, where you come from, your background, your relevant experience?
I'm third generation in the mining business. Grew up in the business. My father was a successful developer, and before that, my grandfather a miner, and felt that it was more lucrative to sell beer to miners than it was to be a miner. So we'll call it 2.5 generations. Mining engineer, have worked on 3 continents and a number of very successful mines, including building a Minto mine north of 60 in the Yukon. Permafrost, 40 below, logistically challenged. So a lot of relevant experience to a project like Sabina's. But I think what really helps us on Sabina and probably gives us even far more knowledge base than we did with Minto and Sherwood is I've got a board that has significant experience too. My chairman is Walter Segsworth. Walter was the chairman of Cumberland, which is now Agnico's Meadowbank mine. And before that was the CEO of Westman and the CEO of Homestake, which ran the largest banded iron formation in the world with the lead mine in the Dakotas. With that, we also have a new addition, which is Rick Howes. He's the CEO of Dundee Precious Metals, which is a 10% shareholder of ours. He worked at Polaris, which is the most northern Canadian mine ever, for a number of years as senior management. Makes Sabina in southwestern Nunavut actually look logistically simple. And a lot of it because that was a base metal mine that also had to deal with shipping out concentrates where we air freight out bullion. On top of that, significant financial, permitting, operating experience in corporate governance. So I think really we've developed a team that we believe is best in class for a project such as ours.
Right, I know in some of the pieces that you've done in the press, you talk about de-risking the project. Perhaps that's something we can come on to in a little bit more detail in a moment. But first I want to ask you, how do you think you did in 2018? If we were doing a report card, what would you say? We
knocked it out of the park in 2018 for everything except for the most important one, and that's equity price. If we look at the objectives that we had, it was our permitting. We got both our Type A and our Type B water license, so we're now fully licensed and permitted to go to the next level. After that was our deal with the Kitikmeot Inuit Association, and that was a 20-year term deal that we completed that would now give us a social license to move the project forward. Also, did a great job of building up the infrastructure and logistics, which is one of the challenges on this project. Built our port facility, our marine laydown facility on time and on budget. We now have the potential to continue to grow this already large and high-grade resource. But we're also in a challenging equity market, and we underperformed compared to our peers. So even though that we did, I think, a very good job in our deliverables, from an equity shareholder perspective, I think that we have to do better.
So what do you think went wrong? When you say in relation to your peers, what were they doing that you weren't?
Well, I think what many of them were doing that we weren't is some of our peers were already fully financed. We weren't, and I think in a weak equity market, people are fearful that you're going to hit the equity market at a wrong time, at an inopportune time, hitting the market with a very significant financing for production probably caused people fear that that there was significant dilution coming in a market that, quite frankly, wouldn't be able to absorb it or finance it. I think that's probably the first and foremost thing. And look, we did a deal with Zhaojin in December, closed it in January of 18. And Zhaojin brought significant dollars, almost $70 million for 9.9% to the company, giving us doing it a very significant premium. And I think what the market sensed is, even though the market was weak, that we were going to go ahead. And I don't think anything could be further from the truth, in that we are very cognizant of the capital structure of the company. That doesn't mean that we won't continue to do small financings to add value, but I think we feel that we need the timing to be better for us to move the project into that ultimate phase. But that de-risking phase that we have to do, I think, will save us dilution, because what it will do is reduce our cost of capital on this project.
Right. Okay. I think we'll come back to Shareholder in a moment, but I mean, I think the other thing is noticeable is you're getting out into the market more than you did last year. You know, we've seen you in several interviews. Would you say that's a fair comment?
I wouldn't say we've done it more. I think maybe we're probably a higher profile company than we were a year ago. Now a permitted first world jurisdiction. You know, there's very few now comparables. There's very few companies that actually have been through this long process of Canada, US, you know, first world, that we can say that we're shovel ready. So I think what happened is we probably have more eyes upon us because we're in a very small group of peers.
Right. Okay. So just to finish off on the 2018 report card, is there anything that you would have done differently? You say you've knocked it out of the park, but looking back, what would you have done differently?
You know, I don't think there's anything that we could have done differently. You know, the not taking a significant equity contribution would put us in a position that we'd probably have to do it in a weaker market later in the year. You know, I think that focusing on exploration still is something that we feel is important. It's one of the few things that you can actually look at our equity performance, and when we deliver exploration results, see that there's a response that's positive. Okay,
so let's look forward for a minute. You've got some pretty impressive shareholders there with Dundee Precious Metals and also Shareholder. What are they asking of you for 2019, 2020? What are you asking of yourselves?
Well, I think we, again, are in a market right now that people are fearful of you know, doing a large equity offering to advance the project to construction and production. One of the things about working in the area that we are is there is more inherent risk, but we also have more inherent reward because of the size of our resource, the grade of our resource. Remember, these are the highest grade undeveloped open pits in the world. If we look at other peers in Nunavut, we're up to double the grade of very successful mines in today's times. But the risk, and when it comes to logistics and infrastructure risk and perceived capital risk to the project, those are things that when we're looking at financiers, we're looking at debt packages, we're looking at equity offerings, is people are afraid that the infrastructure and logistics will cost more to overcome, and they're fearful that our capital costs will be significantly higher than we've estimated.
But that's your role as CEO. You know, you're managing risk every day. So, you know, if we look at some of the things that you've been doing and you're going to be doing this year, I mean, can you tell us a little bit more about that over and above the capital risk component?
Well, the capital risk component is a big part of it, so I'll touch on that. Is that what we have done with our feasibility is brought up beyond that and basic engineering and well down the path of detailed engineering. So getting, you know, rather than an estimate, which is a feasibility, even a bankable feasibility is still an estimate, is getting supplier quotes, getting them refreshed. But instead of the method of delivery, which was EPCM, which is time and materials, it's cost plus, is we are going down the path of an EPC or a fixed price bid for the physical plant. We'll now have an engineering construction firm that say, look, we will actually build this to this specification and with performance guarantee, which gives our shareholders more risk of operational readiness. And we can put some more firm square brackets on those cost numbers. The second part is the logistics and infrastructure is, although we built the port facility, we haven't operated, other than a tote road, a cat train between the mine and the port facility. We're in the late stages of building that winter ice road between those two and showing how we can operate that in the long term through construction and operation of the mine.
I've seen a piece that you did recently where you're talking about looking at debt financing versus equity, and obviously, you know, you think the equity bit is a bit rich at the moment. So You're putting out the first pour to 2022, I think. I think that's what you said. So you've obviously run the economics on that and said that it just doesn't make sense. Are you going to kind of continually monitor that situation between now and then, or is that's the date set in stone?
Because of the seasonality of shipping to the north and winter ice roads, it's binary. We're now at the stage that even if we had all the money is sitting in a bank account ready to go, we could not do Q4 2021 without adding significantly more risk of trying to compress that schedule. So we have to deal with the seasonality, and it was a decision that we looked at and we didn't take lightly. With that being said, the vast majority of our shareholders were relieved that we pushed it out rather than trying to force an equity issue in a market that frankly isn't being supported.
Okay, no, that's understood. So, a couple of easy questions for you here. Give me 5 reasons why new investors, should be investing into Sabina.
Well, the first is this world-class gold project with extremely robust economics. Our feasibility was completed at $1,150 gold versus today, high 12s, low 13s, and we're at a much more favorable Canadian to U.S. dollar than our feasibility. And at $1,150 US, that had a after-tax IRR of over 24%. At today's spot gold and spot exchange, that's well over 30%. Manageable pre-production capital, high annual production, but it's also a district. We've been working on 8 kilometers of this 80-kilometer belt. We have another 2 million ounces, 1 million of that in inferred, sitting 50 kilometers away at the George project. We haven't set foot on that since I've been with this company. So we have that low-risk conversion opportunities, blue sky, greenfield and brownfield opportunities. It's also a significantly de-risked project in the first world, is that we are now fully permitted. We have some licenses to complete, but those aren't, part of a public review process. Those are, show the engineering and design and how you can meet the standards and you will receive. And we've got a company with executive and a board that have a track record of success. So I think I might be more than 5, but I think that is really the rationale behind being a shareholder here.
So, Bruce, I'm just going to ask you a few questions which are kind of circulating the market, and perhaps something that you want to address as well. So let's start off with the project itself. Obviously, you've got a district. It's not an asset per se. It's a district. So talk us through some of the numbers. Your market cap's around sort of 390 today as we talk. How much did you pay for these assets, and what did you inherit?
It was 7 million in cash and 17 million shares of Sabina at the time that we paid to acquire these. And at the time, it was a 2 million ounce resource. A lot of that inferred, no current economic analysis. And frankly, just too small a resource to move forward given the cost to overcome logistics and infrastructure. And so, we've spent significant dollars, and that'd be, close to 300 on advancing this project. Today, we have over 500,000 meters of core drilled into the Back River district. So what we have ended up with is 5.2 million ounces in measured and indicated, another 2 million ounces of inferred at over 6 grams. So, high grade, all of these deposits are still open. And what we have shown in the last 3 years since we've done our last resource update, that we've made 3 new discoveries that are outside of our current economics analysis.
Right. So in terms of dollars spent, do you feel that you've got the value today is a reflection of the time, the value, the numbers that you've created?
No. Today, you have permitted developers like us trading at historic lows. And again, we're not alone. But trading at this point 4 times now, and you can't recreate this kind of value without risk. So if we look at a grassroots project that is going to be typical as in building up the resource, building up your understanding of the economics of the project, going through the permitting, to recreate that today would cost significantly more than what we have put into the ground in Back River. So, I think today we're trading at a discount with many of our peers, and it's this developer group that I think offers some of the best opportunities in the marketplace because the exploration risk is behind, the permitting risk is behind, The feasibility risk is behind, and now it's execution and delivery risk, which again is easier to manage than exploration risk by a big margin.
Right, but obviously, as a public company, you're measured by one number, and that's the share price. You had peaks last year of 182. You're down at 134, 135. You've had a bit of a knock there. But what would you say to new investors looking at Sabina now?
It's a far better company than it was when we were trading at our 52-week high. We have it's not a gold price environment. It's an investor sentiment environment. Today. Why did we use 1150 for feasibility? Because we could, to show the economics of the project work. And again, the sensitivities in that study, so you can look at the economics in today's price. To have a project that doesn't need a higher commodity price, doesn't need a better foreign exchange ratio, and to have these important catalysts behind us, but also having catalysts in front of us. I think it's just a far better company than it was when it was trading 50% higher than it is today.
Well, yeah, obviously you've done a lot in terms of permitting and drilling. You've got data. You've got a lot of de-risked factors. I get that, but what are the things that you think are going to happen this year, which is going to give the stock a bump? So that's what investors are looking for. There's lots of choice out there. So what are you going to do?
Well, the first is try and de-risk the project to the point that we have as much confidence as we can have in capital costs and logistics and infrastructure. But the other part of it, which is very important, is continue exploration. We've made a very important discovery with Neboyak. Our discovery hole was almost 12 grams at just under 40 meters. That's a once in a lifetime for many people in the gold business, and have followed up on it and chased it, not only up dip, down dip. We're going to continue on following that zone up and get to the point that if for a follow-up summer program that we can put together a resource and use that as a leapfrog into additional economics on this project.
That costs money. It takes time, and time's money. So how much cash have you got today, and where does that take you through to?
Well, we started this year with 50 million Canadian. We will end the year without any additional financings in that neighborhood of 10 to 20 million. What we've done is our budget is we've actually put in some civil works and some optional programs that we may or may not do. And it really is going to depend on investor sentiment and whether we think that we have a line of sight on that larger financing. And again, it's going to be based on investor sentiment. There's no use advancing some of those construction activities unless we see there's an appetite for actually paying for those in the marketplace.
Right. Okay. That's fair. So you've got enough cash to get you through to where you need to be, and I'm guessing a lot of that money's going in the ground. There's not a lot of overhead in your business. I mean, the burn rate is.
Our burn rate is relatively low. If we do have payments now that we have our agreement with the Kitikmeot Inuit Association that are not insignificant, but again, with our capital structure, aren't certainly going to break the bank. But the vast majority of our dollars have always gone into the ground, and we try and maintain a very lean operation otherwise.
Right. So let's talk about some of the shareholders here. Obviously, you've got a large sort of Chinese group sitting on just under 10%. What's the plan in terms of working with them or for the business?
So Zhaojin Mining is China's 5th largest gold producer. They actually found us. And that was a deal that took 23 months from first introduction until closing. And what we liked about their philosophy is they take a long-term approach. They recognize the district potential of Back River. They believe that this isn't a 2 million ounce initial project, that this is a much larger multi-generational asset. And they liked management. They liked our ability to work in the environment that we've decided to focus on. And they felt that long-term they could derive good value for their shareholders by making an investment in Sabina and providing some additional assistance to us. Is they're very good underground miners. They have a deposit that they're developing that has some very close similarities to Back River. So not only do we get financial assistance, but also some technical assistance and with a big brother.
But what does that say to the marketplace? Are you saying that you're in bed with Shaojin now, and that's going to limit your ability to sell elsewhere? Because I know you were quite careful about the wording on that agreement. They have the ability to take more, but you've got to optimize this for shareholders.
So they own 9.9%, which is certainly not a blocking interest. They have the ability to go 19.9%, which, that people start worrying about, is that a blocking interest? But we also received a 4-year standstill and a 4-year voting trust where they couldn't make a bid for the company. And more importantly, with the voting trust, if somebody else makes a bid for the company, they cannot simply vote no. They have to either vote with management or provide a superior proposal. They cannot just block. So if people are worried about not getting the best value, I think that agreement actually puts in writing the mechanism that we will achieve best value for our shareholders for Sabina if that M&A was to happen. Now the reality is I don't think anybody wants to see a transaction at the bottom of the market. Particularly with some of the objectives that we have for delivery in the next 2 years.
Yeah, I mean, you're sitting on a global resource of about 7.2 million ounces at the moment, high grades, over 6 grams a ton. You've obviously with the open pit is looking good. The strip ratios are not bad. Metallurgical risk seems reasonable. How big do you need to get before you start looking at offers or people start making offers? I mean, this is already a big project.
It's not big. It's valuation. At what valuation would you be at? And at the end of the day is, look, if you look at my track record, I have no problem building and operating. I also have no problem selling at the right time. It's how to maximize value. And I think it's human nature that, people would rather, whether it be a shareholder taking risk with us moving it forward or our management team taking risk and moving it forward, I think it's human nature that would you rather do a lot of work for more or a lot less work for slightly less? Timing is everything in this business. And we have essentially seen capital lack of reinvestment in the sector. And although in 15-16 we saw a bit of an upwards blip, we're still in a poor precious metal equity environment. I don't think that it would serve any of our shareholders, particularly those long-standing ones that have been with this company for a decade as we advance this project, for us to try to move a sale process at the bottom of the market. So, what we are able to do, and again, the reason that we have the management team, the board, the executive, the employees is we've developed a team that can maximize value and build this and operate this. But it doesn't mean we're going to be closed-minded at the right time and the right valuation to an alternative transaction.
Okay, so you've got the right team there, but the market's the market. So let's move forward to end of 2019, beginning of 2020. You spent your money. Share price is the same. What do you do?
Well, again, where we do have a benefit is to having large strategic shareholders that have a long time horizon. It enables us to move projects forward where others can't. And we also are in an environment that there are so few assets that are at this stage that it's certainly far easier for us to raise capital than many of those grassroots early stage projects. And, especially with a larger market cap of where we are, of $300 million, to try and move it forward with 20 to 30 million a year until the timing is right is not something that would be the worst thing, rather than, again, trying to affect a sale process at the bottom, because the lack of financial capability, that's your only option.
Okay, so let's look at some of the basic numbers. Your NPV looks okay. Your IRR is okay. I mean, what are the numbers that people should be focused on in terms of understanding what the opportunity here is with Sabina?
I would say they're better than okay. If we, again, look at the headline numbers on our feasibility, which a lot of people, especially, it's a lot of retail investors look at that, but don't take a look at the sensitivity. So even though at 11.50 gold with an 80-cent dollar, it's a 24.2% after-tax IRR, at today's spot on spot, it's over 30%, And if we look at the NPV, it's over $760 million, I believe. So I would say it's very good, particularly in relation to our market cap. You have to look at the at least those in current prices. So that alone is looking at a developer that in a normalized market will trade it to 0.7 times NAV. There's a re-rating alone without us doing anything, waiting for a marketplace. But with that being said, is you want to be able to have first mover advantage. You want to be able to take the most attractive equity offerings. You have to be able to move this project forward at the right time, and it's being ready for when that market does change to be able to take advantage.
Okay, so again, looking at the market, I think the general consensus is it's picking up, not particularly fast, but it's picking up, and it may continue. If it doesn't, obviously, the short term upside here is restricted somewhat. I think long term, I think you've argued a pretty good case that there's a lot of upside in the long term. What could you do to affect any of this short term upside that new investors might be looking for? Is there M&A on the horizon? I know you've got a district wide asset, but is that a consideration?
Look, it's always a consideration. I don't think at the end of the day, we're stewards of the company and it's the shareholders' company. If a compelling offer is made, I think that we have to bring that to shareholders. But what I think we can do is, even in difficult markets, and remember, we've been a company that has been able to, since 2011, move this project forward every single year. So we've been able to again, get through a permitting process. Both metallurgy and permitting in this business tend to be, people give you full credit for it until you fail. So we've been through some of those higher risk activities already. I think the reality is if we get any cheaper, we probably won't be around because somebody will take advantage of that. But continue moving it forward, continuing showing that as a management team that we have better ideas on how to reduce capital, how to reduce risk, how to grow the resource. But we don't have that binary risk now of permitting, of putting a resource together, of getting a feasibility together. Again, all of that behind us in a first world wonderful jurisdiction. The upside opportunity, if we continue to see this better interest in the gold sector, I think is a tremendous opportunity. And if we look at the macro factors today, I think for investing in gold is probably never been better.
Okay, so just to kind of finish off here, you said earlier you haven't performed as well as your peers for a variety of reasons. So new investors looking at you, why Sabina? Why not your peers?
Well, look, a lot of its jurisdiction is if we take a look at some of our peers that are out there that are down the development path, they're certainly not jurisdictions that compare to Canada. Everybody in this business, whether it's you're investing in Sabina or any of our peers, has to take commodity price risk. But why take the country risk on top of that? Why take additional permitting risk? Why take additional risk on the technical factors behind it, on resource size, on growth? Because of our jurisdiction and because of the economics of this project, I think really it is one of the better gold development investments that you can make.
Okay, Bruce, thanks very much for your time. I know you're busy. Great to catch up with you and understand the Sabina story in a little bit more depth. It would be lovely if we can catch up in the next couple of months and sort of see how you're getting on.
Sure, that'd be great.
Appreciate your time. Thanks again. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.